Welcome back to Retiring Today. I'm here with Loren Merkle. He's a certified financial planner, a certified financial fiduciary, and a retirement income certified professional. And Loren, we really want to break down now the difference between an accumulation advisor and a retirement planner, and also talk about the value that a retirement planner should be able to add to your retirement vision. So first, let's go back to the accumulation advisor. What value do they add?
Yeah, there's a lot of confusion around this because it feels like advisors all do the same thing. But when you have an accumulation advisor, this is somebody that specializes in the accumulation phase that you have. So you have two distinct investment phases: the accumulation phase, the retirement phase. So the things that you're concerned about in your accumulation phase are all the things that your accumulation advisor should be guiding you through. You're buying a house. How should you buy the house? What kind of mortgage should you be looking at? How do you pay off that house in the most efficient process? You're contributing to a retirement plan. Hopefully, if you have an employer plan available to you, how much should you be contributing to the employer plan? How much do you need to be contributing to the employer plan to be able to retire at some point down the line? Should those contributions be pre-tax? Should those contributions be post-tax? Hopefully your accumulation advisor is guiding you through that kind of stuff. Typically, one way to think about it is the accumulation advisor is more transactional, meaning that they're helping you purchase products. Maybe it's some mutual funds in your IRA. Maybe it's life insurance. So in the event that you pass, you can replace or your surviving spouse can replace the income that was lost by you passing. Maybe it can cover the mortgage that you have. Maybe disability insurance in case you become incapacitated from a work standpoint. You can replace the income while you cannot work. Those are the types of things that the accumulation specialist or the accumulation advisor should be helping you with along the way. And then as you approach the retirement years, you're maybe 10 years out from retirement, maybe you don't have your mortgage or you already have that plan in place. You have a lot of your retirement savings in order, and now it's a matter of how to organize all of these different pieces to help transition you from the working years to the retirement years and then beyond.
And you told a story in the beginning about the tax savings that you were able to show a couple that you worked with recently, and it was $250,000, and that's pretty significant. And I think that there's some people that look out there and say, hey, what value do specifically, we're going to talk about retirement planners, but financial advisors add to my portfolio. And Russell Investments did a study, and they found that value is it's quantifiable.
It's quantifiable in a big way, because what their study concluded is that if you have an advisor, a retirement planner that's on your team focused on other areas of your plan than just the investments, that the retirement planner can add in excess of 5% per year of value to you, whether it's through tax mitigation strategies, decreasing what you pay in taxes, whether it's long-term care mitigation or the investment decisions that you're making. Over 5% per year, that makes a huge difference. There's been multiple studies that have been conducted by organizations like Russell. Vanguard's another one. They came up with very similar results in their study. And the whole point of it is there's way more to your retirement plan than just the investments. There's way more opportunity for you to save more, to earn more, if you have a comprehensive plan in place, otherwise than if you're just focused and solely focused on the investment piece of it.
And that Russell investment showed that the biggest retirement savings piece was in the tax planning area. So let's go back to it, because again, you told a good story at the beginning, but I know there's a lot more you have to share when it comes to tax planning. Actually, we could do about a 4-hour show. He loves to talk about tax planning. But I won't keep you to a couple of minutes right now, but what other things, again, if your advisor isn't talking to you about them, you may not even know about these things. What else is there to look out for?
Yeah, taxes are the number one wealth eroding factor when it comes to your retirement planning. And if you just think about it, I mean, a lot of people are fearful of the market, and it's something to be worried about, or at least concerned about, and have a plan for. But if in the market, if you lose 30% of your portfolio value, and as long as you do the right things and hang on, it's probably going to come back. That's what we see every time. But with taxes, if you pay 30% in taxes this year, you're not going to get that back. And not only are you not going to get that back, most likely you're going to pay 30% next year and the following year, right? This is a big wealth eroding factor. So that's why we engage in tax strategies like a Roth conversion, like tax loss harvesting, like qualified charitable distributions. There's a lot of strategies that we can incorporate, but it is custom to you. Roth conversions, when tax rates are on sale like they are today, work for many, many people. It may not be the best for you right now. It may be better for you next year or the following year. Tax loss harvesting might be better for you, or maybe it's not. It's a case-by-case decision, and sometimes it's a year-by-year decision. So what's good for you this year from a tax plan standpoint may not be good for you next year. And this is why with our families, we build a tax plan every year and say, here's what we're going to do this year. Here's what we think we might do next year, but we're going to reevaluate next year and then ultimately implement what is best based on a lot of different factors. Based on your cash flow needs, based on tax legislation, proposed tax legislation. There's a lot of things that go into it, but all of that needs to be dissected and implemented within your overall tax plan, and through the tax planning, as well as all these other guiding principles of the plan. That's how you can save so much more or add so much more value on a yearly basis to your overall performance. Thank you for watching this clip of Retiring Today, and don't forget to subscribe. If you have questions about your retirement plan, take advantage of the complimentary 15-minute retirement checkup phone call.